Hello everyone. Welcome to Against FX. My name is Sunday. Every Sunday we carry out what we call technical analysis, as that will help us know where the area we should be expecting price to touch, or the direction where we anticipate price to go to. All right, because first thing you need to do is to do your technical analysis. And that is why we take it upon ourselves. We carry out this exercise and we record it and share it so as to help traders that are just start learning how to trade the financial market. It's not limited to only Forex alone. If you trade futures, you trade commodities, and you trade cryptocurrencies, this video is for you. Because if you trade cryptocurrency, you should be able to know how to read structure, because it is structure that tells you where price will get to before it rise again, or the level it will get to before it start dropping. All right, so when you want to buy, you buy low so that when the price rise, then you sell. All right, and when you want to sell, you sell when the price is at a premium price, when it's high, so that when it starts coming down, then you sell. So either ways, as a forex trader, you are making profit. If you sell, if the price is coming down, you sell, you make money. If the price is going higher, before you start going higher, you buy low, then you sell when the price is increasing. So that is the beauty about forex. All right, forex is for everyone, everybody, provided you are the type that is serious and you can read. You have this zeal for knowledge, because it's not something. Financial market is very broad, so you should be ready to keep studying, keep improving. All right. You might say, okay, I have a job already. Yes. Only one source of income is never enough, even if it's just only you without family, not to talk of you. Maybe you have families. One source of income is never enough for anybody. You spend money every day, so you should have something that gives you money on a daily basis. Yes. So if you go to your job, there's no problem. But when you close, the remaining part of the hours, let's say you do 8 hours or 12 hours, as the case may be, what of the remaining part of the hours? You just come home, sleep, fold your hands, and all that? No, it's not done that way. And that is why we are saying, come to us so that we can put you through, all right? So that we can put you through. You can see www.againstfx.com. This is our website. Contact us, all right? Contact us so that we can just contact us so that we can train you. All you need is for you to have your own computer at home and internet. We put you through. You don't need to come to our location. Stay in the comfort of your home. We'll train you. We'll be having sessions with you. All right? In the whole, anywhere you are in the world, just send us a mail. We'll contact you. Then we'll start having sessions with you. And before you know it, you'll start growing. All right? But it takes time. Everything has process. It's not something you just start today and start making money. No, it does not work that way. You will put you through step by step. And by the time you find your feet, you'll now start using it as a source of income. All right. And apart from that, we do send signals. Any trade we will take, we send it to you. Then you also replicate it at your end. So that is when after you have link up with us. All right. So that is that. And apart from that, we are performing a technical analysis. Then we have the fundamental analysis, like all those economic news. You will see when you go to www.forestfactory.com, this is a calendar. Now, when you look at it, today is Sunday, that is July 13th. All right. Now you see July 14th, there is no news, it's free. From Tuesday, July 15th, 2:30 p.m., there's CAD news, Canadian dollar news. Then in that Canada, there's news, there is CPI. All right, all these ones. Then USD, in the US, we have core CPI. All these are news event. And this news event, they have negative and positive impact in the currency. So let's assume you are trading Euro USD and this news is scheduled for 2:30. If you are somebody that does not trade news, you close your trade and stay off. Allow this time to elapse, maybe after 2:30 p.m., then you can now start trading. Allow the market because there will be a volume in the market once the news is released. If it is positive, you see a very crazy moves. All right. And when that happens, you will see some slippage, you see gaps, different things. So if you're the type that does not trade news, you stay off. Let the market calm down. Then look for an opportunity and get into and take your trade. That's all. So Wednesday there's news, Thursday there's news, on Friday there's no news. So it's like this. You have to always watch go to forexfactory.com, go to calendar and see the news ahead. That is how you can update yourself fundamentally to know what is happening based on the currency pairs that you trade. This being said, let us go to the charts proper and do our technical analysis. Right now, the first on the list is British pounds and Japanese yen. All right. What we do, basically, we go to the higher time frame, all right, which is the daily, because we are intraday traders. We go to daily, then we look at the broader trend. We look at the broad trend. So for us to know where the trend is going, all right? Now you can see this is the area we need to focus on, this leg. Because you see price got here, it's been bouncing from here like this, it's been bouncing, but at the end of the day, it finally broke above this point. You can see it's been doing, what do you call it? Push to the upside, retracement, push to the upside, retracement, push to the upside, retracement, push to the upside, retracement. It's making higher high and higher low, higher high, higher low. That is the characteristics of a bullish trend. When a trend is making higher high, higher low, higher high, higher low, like this, for example, higher high, higher low, higher high, higher low, higher high, higher low, then higher high. All right. So when it makes this higher high, it breaks this structure. The next thing you should see, it should come down before it goes up. All right. Because there's what we call a discount level and a premium level. All right. When you are on a bullish trend, you wait for price to trade into your discount level before you buy. Discount level simply means when you want to buy something and when there's a discount, that means it's cheaper. So you wait for price to come cheap, come to the level where it will be cheap for you to now buy. When the price now starts increasing, rising, then you sell. So it's like that. So when it's making higher, 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 low, higher, 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 low, we say the market is bullish. Then when it starts making something like this, when it starts making lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low like this, we say the market is bearish. So when we are in a bearish market, all we need to do is we wait for price to push to a premium level where the price will be high, then we can sell. All right? So that is forex for you. So now with that illustration, we can see that price has been making this higher high, higher low, higher high, higher low, and higher high, higher low, then higher high, higher low, higher high. Then when it comes, it's supposed to come down, then make another push to the upside again. So that is the order flow. But by the time you see this kind of a scenario, you know that we are pushing to the upside. So we are going to be dealing with this leg now. Now that we have established the broader trend, that is the direction of trend on a higher time frame. All right. What we need to now do now is to scale to 4 hours. All right. When you scale to 4 hours, you see plenty information. All right. You can see that small thing that we highlighted. You can see how long it is now. This is 4-hour time frame. We have daily time frame. We have 4-hour time frame. Then when we say daily time frame, we are simply saying that each candlesticks, all right, each candlestick represent daily. That means one candle will open in the morning and close at the end of the day. That is the daily time frame. If it is 4 hours, that means each candle represents 4 hours. If it is daily, each candle represents day. Day 1, day 2, day 3, day 4. Like tomorrow being Monday, it's only one candle that will print throughout that tomorrow. All right? As market opens, it's going to a day. One candle will represent a day. So you can now see this push completely from here, this movement from here, you can see up to this point. All right? That is the daily leg. This is the daily leg. So you can now see that from the daily point of view, we've been bullish, making higher high, higher low. higher high, higher low like this, higher high, higher low, higher high, higher low like that. It's been pushing to the upside. So you can now understand what we are doing. So at this point, what we now need to do is we should scale down again to 3 hours so as to know what is actually happening. We can see that we are still uh, bullish. So for you now to now find opportunity to know when you need to enter the market, this is what we should now do. This is 4 hours, all right? The 4 hour leg, we are going to come like this, all right? And highlight this place. All right, this is where we should be looking for opportunity, leaving all this other side behind because the price is too far. So we should look. Now, there's one thing we should understand. This guy here, this was a push from here to this point. This a leg, and this is another leg. So that's why we say come to us so that we teach you how to trade. So this leg now, price has done its job. What happened? It breaks this structure to this upside. All right? By breaking structure here, this is a break of structure. We call it break of structure because when price push from here, got to this point, it retraced. Retracement simply means price moved from here, created a high, pulled back. And when it pulled back to a discount level. Let me show you something. When we say discount level, we are simply saying this is what we call Fibonacci retracement tool. Watch this. You plot from the zero, from this low, the swing low, to the swing high. All right, you place your 100%, this is 100%, and now place at the top of the structure, you place your 0%. Now, once you do that, you allow price to trade, come down to your discount level. Now, what do you mean by discount level? When we say discount level, we are simply saying that from this 100% to 50%, this is a discount level in the scenario of a bullish market. All right? Then from this 50% to 0%, this is what we call a premium level. Premium level start from this 0% to 50%. Then discount levels start from this 50% to 100%. Now, as the price is increasing, all right, it created a high, a swing high. Before you enter the market, you let price come down to this level. Let price come down to a discount level. Anything from 50%, it can stop here, or it can just enter a little, stop, then find support, then it will now start rising. So you have to be alert. Once price gets to this 50%, all you need to do is get ready because any moment it can turn. Once it gets into your discount level, you take action. Then by the time you now see this kind of a rejection, then you now join, place an order, buy, order, then your target should be this high. Because the idea is that we trade from a strong low to take out the weak high. Why? Because this leg pushed price to this upside and created a high. It has done its job. Then this high started pushing price to the downside. It did not take out this low. It was unable to violate this level. That means it failed to create a low. That means it's weak. What now happens? When price rebounded from here, it's going to take out this place as a liquidity. It's going to take this guy out because it's weak. Then this guy will now be a strong low. Because why? He has done his job by breaking structure to the upside. So that is how it works. You understand? So at this point, when you see something like this, for example, when you see something like this, guys, you should understand that this point here is not really a pullback. This is just a trap, a liquidity. When you see something like this, it's a liquidity, guys. Don't fall prey to this kind of trap. This is a liquidity. It shows that price will come back again to sweep this place. If there's going to be a pullback, it's going to use this place as a liquidity. This is the main structure like this. This is the main structure. This is the main structure, not this one. This one here is a trap. It's just a liquidity. If you take this as a pullback, all right, you will be trapped. All right. So when you see something like this, just know that when price is pulling back, it's going to use this place as a liquidity. I hope we understand what I am saying. So if you are the type that always have issues like this, please don't. This is the real, follow the structure. Follow the structure. This is the structure. Okay, this is the structure. All right. Now that we know what we are doing, we now need to focus on the last break of structure from the main structure. This is the last break of structure, guys. Let me show you guys. This is the last break of structure. This one here is the last break of structure. This very one here. So this is where we should be focusing on and look for an opportunity. Okay, when price took us from here, got to this point, then there's a pullback to a discount level. How do we know that there's a pullback to discount level? Let's bring our fib to. We measure from here to this point, all right? From here, we measure from here to this point. From 100%, put our 0% on top of the structure, then look at price came down, traded into our discount level. And mind you, 61.80 is regarded as a golden ratio in Fibonacci retracement tool. All right? And 38.20 is regarded as what? A continuation. When price is pulling back, when price finds support here, it can rebound and push and continue pushing to the upside. Then 23.60 is regarded as a continuation again. When price is pushing to the downside, once it finds a support here, it can rebound and start pushing again to the upside. So, but that is not a full retracement. If it's going to be a full retracement based on the order flow, price will definitely push into a discount level, anything below 50%, guys. All right? So we are now clear. You can now see that price pushed into this, push below 50% and 60%. before it rebounded and started going up again. So that is how you trade effortlessly without stress by using tools that are available in your trading platform if you know how to use them. So if you really want to have the in-depth on how to use Fibonacci retracement tool, go to my YouTube channel. You will see I have a video on how to use Fibonacci retracement tool, guys. So at this point, this is our last break of structure. Anywhere you see BOS is a break of structure, all right? So now we now see that price is going to the upside, and here is the last high, all right? Where price has gotten to the last high, and here is our low, all right? This point is our low. This point is our low. And another thing I want to tell you guys is that when you want to plot your fib, this leg is not, this one here is, it is not where you should measure your fib from. This guy only created a structure. Now, the movement, the structure now started from here. This is what breaks the structure to the upside, not this. So don't make the mistake of plotting from here. A lot of people make that mistake. Please don't do that, all right? This is where you should start your plotting from. You plot from here, all right? You plot from this very point, not the other way around, all right? You start plotting from here, not here, because this is the leg that broke the structure to the upside, all right? So at this point now, what we should be expecting is that we should be expecting price from here will now scale down to 1 hour, all right? But you can, from 4 hours, you scale down to 3 hours, scale down to 2 hours, they scale down to 1 hour, all right? We are on 1 hour. We are on 1 hour because most of my trade that I do execute on 4 hours or 1 hour. I don't go below that. If you take trade from 15 minutes, there is no problem. It's still the same process. But all you need to do is that you must carry out your top-down analysis, guys. You can see from the higher time frame, from that higher time frame, 4 hours, we were able to single out a leg that is current. All right, because we have the overall trend, overall direction of trend, then we'll now have the current trend. So which one is the current trend, guys? This is the current trend that we need to focus on. All right, this is where we need to single out an opportunity for us to enter the market. So at this point, we have a break of structure here. We have a break of structure here. All right. And that is the main break of structure that we have here. The other ones, let me remove this so that it will be clear enough. This is the main break, the current leg, this is the break of structure. You can see from the main trend, the overall trend, you see the break of structure here. And when you now look at it, you now discover that after this pullback, you now see inside of it, you now see another trend. So that is where you now have to single out this leg. This is where you should look for your opportunity. Now, right here, we have break of structure. Then at this point here is just a rough something. So we don't need to regard this as a break of structure. Let's forget about this because we know that it's going to serve as a liquidity. But when you look at this point here, you will understand that something is going on. And what is that? That is what we are going to find out. So you now see price created this level, and it's a what? A resistance, a support level here. There's a support level created here. So we are going to be waiting for price to either push, all right, we are going to wait for price to push to our discount level, all right, for price to push to our discount level. We want price to push to our discount level, all right? We want price to push to our discount level so that, because if you look at it, you discover that this is our POI where price supposed to now retrace to. Where is the POI? Here is the POI. We have a POI here that is where price that we are expecting this move to come to before it starts pushing to the upside. So how did we know that there's a POI there? We know because it's this guy here that caused the break of structure to the upside. This is what caused the break of structure to the upside. So price is supposed to come back to interact with this level, and before it starts pushing to the upside. So that is why you see this push to the downside is coming. This is a retracement move to the downside to come and interact with this level before it finally move to the upside. So we have two POIs. The one that is very close is this. Then the next one is this. All right, so we have two POIs here. So we should be very mindful of price right now. So at this point, we just need the first one here. We need to first of all put our fib2 from here up to this level, the high. So because we are bullish, then when we say bullish, that means the price is increasing. So now at this point, you can now see from here to this point, we'll put 100%, then at the top of the structure, we'll put 0%. So look at it, guys. Where is our discount level? Now, when you look at it very well, you discover that price has successfully traded into our discount level. But should price rebound and start going up from here, that is what we are going to find out as market opens now. Market has opened. We can now see whether this level we hold, all right, because price moved from here. It came, it rejected from here, it bounced. It came again, tried a bounce. It came again, tried a bounce, and now when market open, let's see what happened. So if it breaks below, that means it's coming down to this level. It's coming down to this level before we see any further reaction. So at this point, all we need to do is for us to wait for price to tell us where it wants to go. Because when you look at it, if you remove this fib2, for us to see it clearly, you can see that there is another POI also here this one here that is also significant. All right, but I will put more attention to this very one, as this guy can be used as a liquidity to get to this level. And apart from that, we see a fair value gap here. And if you don't know what fair value gap is all about, you can go to my YouTube channel and find out, but I will still explain. Now, when we say fair value gap, we are simply saying this gap that was created by price between this level is a fair value gap. What happens? Because at this point, from this level, price rose up to this level within some minutes or seconds. So there was a change in price. Let's say, for example, if you buy an asset, $100, and within a few moments, it just skyrocketed to 500. All right. So in trading, that gap is what we call fair value gap. So it's very important because in future, price will still come back to close the gap. All right. It's still coming back to, price will come back in future to close that gap. So once you see that there's a fair value gap close to your POI, like this, you know that is an interest point where price will still come back to in future, all right, to come and interact with the level. So that being said, I think right now it's clear that another confluence is that we have our psychological number here. A psychological number is a number, a psychological level, is a level where traders, after their analysis, they will always stay there to wait for price. If it's bullish, they will wait for price here. That means the psychological number will act as a support level. If it's bearish, the psychological number will act as a resistance level. Either ways, a psychological number is a round number. For example, you can see 198.000. The next one is 199.000. So all these are round numbers. They are psychological numbers. They are very, very important, vital for trading because price always move from this area. If it breaks below, that means it's going to get to the next point. If it break above, it's going to get to the next point. So it's like that. Price move from point A to point B, from point B to point C, from point C to point B, from point B to point C. So it's like that. So at this point, we are going to be watching price. All we need to do, because we have our confluences already, bringing out our fib 2, we plot our fib 2 from here to this point. We are expecting price is already in the discount level, in the discount area, but should price rebound from here, then push to the upside, let's watch what happens, all right? Because apart from price being already in a discount level, the psychological number is just here. All right. For the fact that price has traded into it, has but it breaks this upper one, is going to get to this next one. So we are confident that this move should extend up to this level. All right, before it push to the upside, or below this level, get to this POI, then it can now push to the upside. So at this point, we are waiting for price to get to this point. Then before it now start pushing to the upside. So our analysis is that price should get to this point, interact with this level, then it will now start pushing before price. We now push to the upside. So we are bullish overall, but we are waiting for this pullback to end, then before it will start a push phase. So thank you so much. This, as far as British pounds and Japanese yen is concerned, we are just waiting for a push to the downside a little, interact with the POI that is closed, or if this one did not hold, that means there's another POI here, point on interest. So there's another POI here where price can get to before it finally push to the upside. So let's keep an eye. All right. Then the next one we need to analyze is GDP USD. All right, let's analyze GDP USD. GBP USD. Starting from the higher time frame. All right, so what we need to do first, we have to plot our let's plot our psychological level. We need to map out our psychological level. 1.30,000, 1.31,000. We have to plot our psychological level. Then 1.32,000 next. Let's put that from 33,000, 33,000. Then there's another 1.32,000. All these are psychological levels. Like I've told us, they act as support and resistance level. So if you don't know, this is how it is done. All right. Then we need to put the 34, 35 onto 35,000, then 36. This 37, then between we have 36. Why do we put all these levels? Because all these levels are a resistance, they act as a resistance and support level. They are very crucial. All right, price move from this point to this point, from this point to this point, like that. 37, then we need to have 38, 132. So then let's put the last one, 39. So we are done right now with our markings on psychological levels. So at this point right now, we know we've been able to ascertain that we've been bullish, all right? We are bullish. This is a bullish trend, guy. How do we know that it's a bullish trend? Because it's been making higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs is on higher. This is a higher high is on low now. Then what should we be expecting, guys? Where we should be expecting that price should rebound from here, then push to the upside. But if you violate this level, that means it's going to start pushing to the downside. At this point, we are expecting that price should follow the order flow, which means making higher high, higher low, higher high, higher low. So it's at the resistance point now, is pushing to the downside. Price supposed to, and at this point, this is a psychological level. It's a psychological level. The psychological level is what? This 1.35 thousand. All right, 1.35 thousand is price supposed to hold here, then start pushing to the upside. But if it fail to stall here, then that means it's going to push below. And once it start pushing below and this level is violated, that means we are going to be having a bearish run. So, but at this point in time, this is a bullish movement. All right, this is just a retracement phase. The push phase that is completed, this is a retracement phase. So at this point, we'll first of all highlight the last break of structure. Let's highlight the last break of structure, which is this. This is the last break of structure. That is the last break of structure. Then let's go down, scale down to 4 hours so that we can see more information as to what is going on. This is what we mark. This is the level we mark. All right. This is a break of structure. This small level, it should not be regarded as a pullback. All right. It should not be regarded as a pullback because this, at the end of the day, this kind of a level is going to be used as a liquidity. So you can now see that price has already taken this level out, and don't regard this place as what? A support level. You now say, okay, because price has broken below this place, we are now bearish. No, we are still bullish. We are still very bullish until there is a violation of this level. Until there's a violation of this level. Once this level is violated, then we can now say that we are in a bearish trend. All right. We must see this level being violated. After that, after the violation of this level, then we should have a pullback, then break of structure to the downside. Then we'll now say, okay, a bearish trend has been established. If you don't see this kind of a move, don't consider it as a downtrend. We are still bullish. Guys, you guys should come so that we can train you guys on how to, all these things are something that you need to learn, and not because we are doing analysis. We cannot give you everything right now, even though we are carrying out technical analysis, but we are still trying our best to dish out all this information. But note that this uh, uh, at this point while we are performing our uh, weekly analysis, you cannot gain everything. You won't be able to give you everything that you need that will equip you to be a trader. That's why we say come to our website, send us a mail, then we can now communicate with you, take it out from there to know how to train you. You don't need to come to our location, stay in your house. Then we agree with our client so that we can even, once we do a timetable for your section, then we can adjust it based on your own time too. We understand that we are all busy. We are all busy people. We have busy schedule, but we can work with your time as well. So that being said, at this point, we now know that we are in the phase of pullback. All right. Now, this is a push phase. This is a push phase. Now we are in a retracement phase. And where are we supposed to expect price to get to? We are expecting price to push into a discount level, guys. Why? Because we are bearish. We are bullish. I beg your pardon. Why? Because we are bullish. We want price to pull back, tap into our discount level. And if you look at it, you discover that this very place here, we have a fair value gap. This fair value gap. All right. Why do we say fair value gap? We are simply saying, based on what I've told us before, price took off from here. It created this massive gap. And where is the gap, guys? You see this bearish candle? All right. The high of the bearish candle. Then the low of the next candle. The low of the next candle. You see this gap? And you can see price has tapped into this gap. Is inside it. It needs to close up this gap. Price needs to close up this gap before it rebounded, before it can rebound, then start going to the upside. Until that is fulfilled, price will not go anywhere. So that is just the secret of trading, guys. And at this point, if we use one, let's use another confluence, all right, to buttress our point. We'll put our Fibonacci retracement to 100% from the downside. Then we put the 0.00% to the high of the structure. And where are we? It has traded into our discount zone. Between this level, between this 50 up to this point, all right, is our discount zone. Sorry, to this 100%. And once you see price breaks this 100% below, another thing, another trend is about to occur. And make sure it's not just, it's permitted to, price is permitted to spike above it, but spike below it, thereby taking liquidity, but not to body break it. Once it body breaks this level, we now know that we should be preparing to change our bias because price is about to change direction. So with our confluences, we have a psychological number here, which is 1.35 thousand, all right? And we have a fair value gap here, all right? And price has traded based on our Fibonacci retracement through, price has traded into our discount level. So we are just waiting for a reaction here, waiting for a rejection here, probably a pin bar rejection, then and followed by an engulfing candle, bullish engulfing candlestick, or if it forms a money star or W pattern, or inverse head and shoulder, then we can now inverted head and shoulder, then we can now or double tops or double bottom, sorry, then we can now join the price as it's about to start rising. All right. So that is how it is. Well, as far as I'm concerned, we are still very much bullish. All right. Our target should be here. Our target should be here. All right. So that is all for that is all for GBP, USD. So the GBP, USD, we are on a retracement level. Price has pushed into our discount level, but we are still hoping that it close up this fair value gap, so that once this fair value gap is closed up, then we can now, this very one here, Once it's closed up, once it's closed up, then we can now FVG is a fair value gap here. So we're expecting price to do its magic here before it push to the upside. And where should we be targeting? This high. All right, we should be targeting this high. All right. So that is it for GU, GBP USD. Now the next one on the list is US 30. US 30, as you can see, we have already map out our psychological levels already. And one moment, I think I will need to put one more psychological level there, 45, then we should have 46. Should have 46. Should have 46. So 46, this is 46,000. Then at this point here, we'll go to the higher time frame, which is daily. From the daily point of view, we can now see that the last break of structure is this. The last break of structure is this here. This is where we experience last break of structure. BOS is a short form of what? Break of structure. And what do we mean by break of structure? We are simply saying price rose from here, created a high, it came down, a move, created a high, came down, then finally it broke this level. So that is a break of structure. All right, so at this point, where did the break of structure happen? The break of structure happened here. This is where the POI is seated. The break of structure happened here. So we'll now have to scale down. We'll now have to scale down and do our analysis thoroughly. All right, we'll do our analysis thoroughly. All right. See what break of structure happens here, but when you now look at it critically, you will see that another POI is sitting right here. All right, when price push, if for you to be a forex trader, you need to be very smart. You need to be very grounded in on how to read market structure. It's very important. If you don't know how to read market structure, you will just be wasting time because you won't even know the direction where to go to, where price is headed. Because right now, this point here, there was a push here, but at the end of the day, you discover that right here we have another POI here. All right, that is where price and is sitting right the same level with psychological number. So this is what caused this push to the upside, not this very one, not this very one. This is what caused the push to the upside, all right? So this is the POI that is where price, all right? So we should concentrate on this. So at this point here, all we need to do is let's do it like this. Then what we need to do is we know that we are bullish. We're in a bullish market. How do we know? Because we are breaking structure to the upside. So, guys, if you are following me, you should understand that it's very simple too. First of all, what you need to do is to establish the overall direction of what? The structure of the trend. You know the overall direction of the trend. Then after which, you now mark the last break of structure. From the last break of structure, you should be able to single out a leg that you now from there see the current trend where you look for an opportunity so that you can now join the trend. If it's in a push phase, you should be able to know. If it is in a retracement phase, you should be able to know. Now, once you know that, if it is in a push phase, you just wait for it to be exhausted and let it come down. Let the retracement start. As the retracement is starting, you can scalp then, but make sure that you don't stay on the trend for so long because it's retracing. If it's retracing, it's going to retrace into your discount level. That is why we have what we call Fibonacci retracement tool. All you need to do, plot your Fibonacci retracement tool, and you see we are in a retracement phase. We are in a retracement phase, all right? Why did we say we are in a retracement phase? Because price created this little resistance level and support level, but it has violated it. You can see it created this resistance support level, I beg your pardon, but now price came down here, violating this point. All right, it has violated it, so it's a sign that this point has been used as a liquidity to facilitate, because it has been used as a liquidity to now facilitate the retracement push to the downside. Now, when you look at this point very well, you now discover that this very point to this point, price will have to trade up to this level. Price will have to trade up to this because this point is what? Is 50%. Anything from here, anything from this point is what? A discount level. So we should be expecting price to push up to this point, either here, 50%, 61%, and 79% before it finally push to the upside. So we are waiting for price to come and interact with our POI here, with our POI here, with our POI, because this is our POI, and the POI is sitting right here for the 3,000, sitting on a psychological level. And apart from that, this level is what? It's a resistance level, all right? When price now comes back to this level, it becomes a support level. So it's a very, very vital level. It's a level that is well priced. So it's a POI that is well priced, and we should expect price to come down here, all right? We should expect price to come down before it starts going back to the upside. So as far as I'm concerned, this is our analysis. We are waiting for price to get to this point. Then finally, it will now take off and start going to the upside. So your take profit target should be here. Okay? Take profit target should be here. And mind you, we are saying that price must pull back below 50%. If he finds support here at this 50%, it will start going up. But we must see we must see some reaction here. Either it creates a double bottom or inverted head and shoulder or bullish engulfing candle here or a pin bar rejection. You see a rejection. That rejection which tells you, okay, buyers are in the market, the retracement has ended. Or you see a morning star formation. So once you see any of those, then you can now take your trade and push the price to the upside. So as far as I'm concerned, this one is straightforward, and I hope we understand the analysis. As it is now, you can now scale down to uh, any time frame of your choice, maybe 1 hour, all right, so that you can now execute your trade on 1 hour. We have already marked the POIs. You can see is this. Then we are waiting for price as it's coming down. Let it come interact with this POI. Then we now join to push the price up. But one thing that is very, very obvious, anytime price breaks, body breaks a psychological level, it must surely get to the other level. So have that in mind. This push to the downside, once the body breaks this psychological level, we should rest assured that the price, the pullback will get to this point. Because this is the POI that is well priced, and there's a psychological number sitting here. So that is that. As soon as it gets here, don't say, oh, we are bearish. We are not bearish. We are bearish until this level is violated. Until this level is violated, we are not bearish. We are bearish until this level is violated. Because from the higher time frame, this is the last break of structure. All right? This is the last break of structure. So I hope this is very clear. This is US 30. So congratulations, guys. So we are waiting for buy as well. Then Euro USD. Oh man, I'm having a headache. It's not easy, man. So I think I will need to still add up. Yeah, what is this one? First, what we need to do is mark the psychological level. All right. This one is 15,000. Less 15,000, we need to put 14,000. 14,000. Then we'll put another 13,000. 13. 13,000, then 12,000. Like I told you guys, it's 12,000. These are psychological number where price will always rebound, then push. All right, so okay, let's put one more 12,000. Let's put 11,000. Psychological levels they are round numbers. As a trader, you are not supposed to take all these things for granted. So as far as this level is concerned, yeah, we know that we are bullish. We are bullish because why? We've been breaking structure to the upside. push, pullback, push. We are having a pullback. So this pullback is very obvious that this place here is going to be used as a liquidity based on what I've told you guys. This level is small, all right? This level is small. Let's say, for example, you're on an airplane, you are flying, all right? So if there's a little turbulent, you like this, you will not feel it. But if you have a turbulent like this point where price came down, there's a uh, the flight just move to the downside before it start going up, you will feel it. But if it's here, it's been going up a little turbulent, it came down a little, then push, you will not feel it. So that is the difference. So in trading, is the same thing. This very one here, it should not be regarded as what? As a support level. Should not be regarded as a support level. This is a support level. This is not a support level. This place just happened. Maybe some guys just took their profits and all that, and they now see a little pullback. So we are in a retracement phase. It's very clear. We are in a retracement phase. This is an uptrend, but retracement phase. So first, I need to mark this place being the last break of structure. Being the last break of structure. This is the last break of structure, right? I hope you guys are following. Follow me, guys, so that you can always do your own analysis. All right. If you are a professional trader and you don't know how to do analysis like this, I tell you, you still need to learn more. Forex is not just you making money, and so there are some things that are lacking. Most people don't want to learn. They just believe, okay, you just jump into Forex and start making money. No, it's not like that. Concentrate on the skill set first. Then the money will become a byproduct. So that is how it is. If you know it, you know it. If you don't know it, you will never know it. So that is just it. So at this point, we have this is a low, this is a high, this is a break of structure. So we should be working with this leg. This is the current leg. So that's how to do analysis. Then I will now scale down to 4 hours. So you can now see this move. So can we all see this move? If you know how to do analysis like this, you won't struggle for trading. You just know where to wait for price. You don't need to kill yourself. Wait for price, and once it gets there, set your alarm. Once it gets there, the alarm triggers. Set your alarm very close to your POI. Once it gets there, your alarm triggers. If you are free, you go there, look and read the structure, then read what is happening, then you take your trade. Or if you're the busy type, all you need to do is put pending order. If it's bullish, you put a sell limit order. If it's bearish, you put um, if it's bullish, you put a buy limit order. Sorry. If it is bearish, you put a sell limit order. So that is just it. So at this point, we cannot see this is the leg we are playing. You can see push to the upside down, push to the upside down, push to the upside. We are coming down. So guys, what is so complicated about this reading of a structure? If you have been following me now, if you watch my video up to this point, you should be able to know, okay, at this point, what is going to happen? The only thing that will happen now is for us to wait for this retracement phase. This is a pullback. If I say retracement, if I say pullback, it means the same thing. It just simply means a moment of relief. Now, this one broke structure. It has taken price high. It needs to come down. The price needs to come down. Coming down to where? Coming down to a discount level. And the discount level is what? That is where we have Fibonacci retracement tool. It's a tool that has been proven for donkey of years. All right. All you need to do, bring out your Fibonacci retracement tool from this level to this level. As I told you, if you since this one is a bullish trend, you start from the swing low, put your 100% and put your 0% at the top of the structure. That is a swing high. This is a swing low, this is a swing high. Then all you need to do is you wait for price to now pull back to your discount level. All right? Pull back to a discount level. All right, so at this point, we are expecting price to pull back to this level, this very point, this level. Anything from 50% down, like as I have explained, anything to 50, from 50% down is a discount level. Anything from 50% up is a premium level. As simple as that. So now, if you look at this POI, you know that this POI, okay, let me remove this thing because I'm just highlighting it so that you guys will really flow with what I am doing. All right. This is a POI that is well priced. All right. Why is it well priced? Because of this imbalance that is here. This AVG that is here. This very one. This AVG that is here. All right. You cannot see. Why we call it heavy? This is a gap? Why? Because this level, this high of this candle, and the close of this candle, you can see this level here, from here to this point, all right? This is an imbalance. It's not supposed, it's not allowed in forest wall. The gap is too much. The price was here, it now jumped to this place. All right, the price was at 1.14851. It now jumped to 1.15481. So in future, as this retracement is happening, price will gradually come back and cover up this place before it pushed again. So where should we be waiting for price? We should be waiting for price here. That is where we have our Fibonacci retracement tool. We plot, then we are going to now wait for price here. Because we have imbalance here, price will surely come back. But there's a POI here. All right. So if price come here, you see a reaction, you don't need to panic. Price will surely come back to this point. All right. Coming into this point then means that you see, once it breaks below this level, this psychological number, 1.16,000, if it breaks below this psychological number, definitely price will get to this 1.15,000. Once it breaks below 1.16,000, it's going to tap into this 1.16,000. So what we should be looking for right now, let me remove this. Let me remove this. So what we should be expecting right now is that so price to push to this level, then we'll take the price up. That is the analysis that is on Euro USD. Euro USD. So we are looking for price to come here. Then we can now push to the upside. So it's very clear. Like this, you can now scale down to 1 hour, for example. If you want to scale down to 1 hour, do like this. 1 hour. All right. You see, this is the POI we are talking about. This is the POI. That's where our price will come here. All right. If you at the time that takes your trade from 15 minutes, you just scale to 15 minutes. So it's like that. It's the same thing. Scale to 15 minutes, wait for price to come here. So at this point, do you need to do anything? You don't need to do anything. Just hold on. Let price come to you. All you need to do is set your alarm, or at this point here, set your buy limit order. All right, buy limit order. As soon as price get to this point, it will fill your order. Then you start pushing to the upside. So this is how you do your analysis, guys. This is how you do your analysis, as simple as that. So the last but not the least, man, I'm tired. I'm having headache. We've done analysis on GDP, JPY. We've done analysis on GBP, USD. We've done analysis on USD, US 30. We've done analysis on Euro USD. All right. Now, now let's do this last one. This one on SAUSD, that is gold USD. Let's do analysis on gold USD. Oof. Yeah, at this point, we need to first of all, this is a daily time frame. Then we need to first of all plot our psychological number. Guys, remember, it's very, very important. Some I have 35,000, 44, 34,000, 33,000, 32,000. So let's put, well, because this is the last break of structure, let's put more, one to the top. The last one, 35,000. Let's put 36,000. Let's put 36,000. Then we'll add 31,000 and 30,000. Let's add 31,000. Yeah, 31,000. Then let's add 30,000. 30. Okay, at least it's okay like this. On gold USD, we can see we've been bullish, and the last break of structure is very obvious. This is the last break of structure. This is the last break of structure. This point here is the last break of structure. How do we know that it's the last break of structure? We know that by looking at this structure, when price push to this point, it retraced, then pushed to the upside. Then after that, you cannot see it's just like this. All right, you can see what is happening. So after this last break of structure, the current trend is this. So we need to single it out. The current structure is this. That's how to simply, where you can see push, pull back, push, pull back, push, pull back. This one used as a liquidity is pushing again. Then when you now scale down to 4 hours, you can now see where we mark is between this, all right, and this. So this is where we should focus on. We're on 4 hour right now. Then this last break of structure, if you observe, you discover that it has been violated. This last break of structure has been violated. All right. And see, this last break of structure has been violated. How do we know that it has been violated? Look at it. So at this point, what we need to do is mark our structure by simply saying market shift. After market shift, what happens? What should happen? We should see a pullback. We'll mark our structure by simply applying this market shift to denote that the market is shifting from a bullish state to a bearish state. What happened? After a market shift, there was a pullback, then break of structure. At this point, price is finding its way to the upside. So we should, because price has broken this psychological level, it has to get to this point. But right now you can see he has even broken below this level and is inside. He broke again. Then what we should be expecting, because there is a resistance here. There's a resistance here. All right. There's a resistance here. And apart from a resistance, there's a psychological level here. So we are anticipating that price, all right, because we are like this point, this is what? Violation of a structure, market shift. And what happens here? We discover that this leg, after the market shift happens, then we now see a push to the upside, violating this leg, violating this resistance level, then a push to the downside that fails to violate this leg. What we are now seeing is a push to the upside. So if price should break this support level, no, I'm sorry, if price should break this resistance level, if price should break above this resistance level, then we'll resume the underlying bullish trend. All right, we'll resume the underlying bullish trend. But if we stall here, we might actually see a push to the downside, a push to the downside. So we'll need to just wait and see what happens right here. What happens right here? If price gets here, let's see the reaction. Okay, what we should, because go by this trend right here now, right now, we have seen that we are pushing to the downside, but something happened here. All right, this resistance level, this very point, is violated. All right, has already been violated. You can see from here, it has already been violated. So we'll now say market shift from here. We'll now say market shift. All right. We'll say market shift. Why? Because this guy broke structure to the downside. It's a strong high. It's a strong high. But because price action has violated this leg, this is this market shift. It gave us market shift here and break of structure. Now market shift to the upside again. All right. Then it now created a low. So which now signal another push to the upside. Now if price continue rallying up, rallying to the upside rather, if once this leg is taking, we'll say break of structure has happened. So that will now establish, once this high is taken, that will now establish a resumption of the underlying bullish trend. Once it push above, we'll now say break of structure, then price will get here. We need to see price will get here. We need to see a reaction because this is a resistance for price to come back to this level. All right. For price to come back to this level, retest this level, then before we can now start pushing to the upside. Price gets here. Price gets here. There should be a reaction because why? Because there's a resistance here. So after that reaction, let's see whether we can break above immediately. Once we close above, our next target will be price getting to 35,000. Once price close above this level, is going up. But if you close here, rebound, come down, it's coming down to retest this neckline or this level. This level, price will come back to retest either this level, all right, or this level. If it breaks below, that means it's coming back to retest this level here. All right, it's coming back to retest this support level. So when you are trading gold, you have to open your eyes very well because this is a very volatile pair. All right, it's very, very volatile. All right, so if price get to this point, as it's going, I know it's going to get here. If this resistance holds and price store here, it's going to push back the price. All right, if you push back the price, now we'll use our Fibonacci tool, for example. We can't use it like this because it needs to create a high. Then when the pullback now starts, we can now use our fib. All right, because at this point now, nowhere to put our Fibonacci tool, nowhere to put our Fibonacci tool. It needs to create a high first. It needs to create a high, give us a structure. Then when it resumes pullback, all right, we will now plot once the pullback phase starts, we can now plot our Fibonacci retracement tool. Then we'll now start measuring. We'll now use our Fibonacci tool to measure the structure before we now know where the level price will now pull back to before the underlying bullish trend will resume. So as far as I'm concerned, we push, get to this point. If if there are strong sellers here, it will push price back down. All right, it will push price back down. The areas we need to put our eyes on: this level, price might pull back up to this level. If it holds, it push back. This is another level. If it holds, it push back. This is another level. If it holds, it pull back. Otherwise, price will come back to retest this level. All right. These levels we have is a support level, and apart from that, we have a psychological numbers right here that is acting as a dynamic uh, support level. All right. So we'll just watch, allow these guys to go up, get to this resistance point, and let's watch the reaction. And once it send price back, then the next point is what all these ones have pointed out. So as far as I'm concerned, we still remain bullish. We still remain bullish because market shift has happened. Market shift happens here to show that we are bearish, but when price got here, it stalls. Then there was a market shift again, or change of character. When I say change of character or market shift, I'm simply saying that a bearish trend has now turned to become a bullish trend, or a bullish trend has now turned to become a bearish trend. That is the word market shift or change of character. So, guys, thank you guys so much. As far as I'm concerned, I'm not going to do anything. I'm just going to be watching for price to get to this point. Let me watch the reaction. Then, if it holds, it's going to send the price back down. So where will the price get to? These are the points that I've noted on the chart. Then a significant one is this very level where we have this our psychological number 33,000. So if it can pull back to 33,000, then here we should be expecting a push to the upside. Then we can now join the trend. So if it reacts here, if there's a reaction here and you see price pulling back, if you want to catch the retracement the retracement phase, but just be careful. All right, just be careful. Just be careful because we are bullish. Once we are bullish, all you should be looking for is how to uh, how to buy. When we are bearish, you look for how to sell. So that you look for selling opportunity. So it's very, very important. So guys, thank you so much. Uh, I wish you guys a blessed week ahead. All right. So thank you guys. At this no point, at this junction, I need to go. So and if you know that you have pairs that have not touched, because I cannot analyze all the pairs, please drop it at the comment section. Just drop a message at the comment section with the currency pair. If it is major, minor, exotic, anyone, I'll give you the breakdown and I give you the opportunity that is there. As simple as that. So thank you so much and God bless you guys. Good night and have, have a blessed trading week.